Well, hey everyone, and welcome to this video. Thank you so much for watching. My name is Eric Thompson. I'm president of Windermere Real Estate here in Colorado. We put this video together for you as a recap to our annual real estate market forecast. So if you want to see everything that's happening in the Denver real estate market, this video is for you. All right, so first thing I want to do is thank the great sponsors that we had at our annual forecast event that we had just a few weeks ago. Penrith Home Loans, Charles Schwab, AmeriFirst Financial, Citywide Home Loans, Blue Ribbon Home Warranty were all just terrific sponsors for us. I want to thank them so much. They helped us throw a great event. Okay, so just real quick about Windermere Real Estate, in case you don't know, a little bit about Windermere. We are growing all over the Western U.S. So these are the 11 states where we're located. We're located in these states. We have 300 offices in these locations, nearly 7,000 agents, and we are growing rapidly in Colorado. We're having a lot of fun doing that. Today we have 5 offices all across the state. We have over 70 agents now to serve you. We're excited about our growth in Colorado. So here's a question that we get from our customers pretty much every day. So pretty much every day we hear from them, so how is the market? This presentation, this little video that we put together for you is all about that question. It's all about helping you out with that. By the way, if you want this PowerPoint, I'll show you how to get that. So stay and watch to the end. I'll let you know how to get this PowerPoint, plus another couple resources that we have for you. All right, so how is the market? Well, let's first look at 2016. What were the big headlines from 2016? Well, one, of course, is price appreciation. And let's put that in perspective. We rank Denver Metro at 3rd place in the whole country for year-over-year home price appreciation. So out of all the cities in the whole country, Denver is ranked 3rd. So we hear about the incredible price growth. We hear about the double-digit appreciation. We are ranked 3rd in the whole country. We had, last year in Denver Metro, over $22 billion of real estate was sold. If you went back to 1990, that number would be about $2 billion. So the number has grown 10 times since 1990. So last year in 2016, $22 billion of real estate was sold. We've had some record highs. We've also had some record lows. So we have record low inventory. This is the number of homes for sale on the market available to buyers. We have low inventory today. Today we have less than 1 month's worth of inventory on the market. Buyers today simply, especially in the low price ranges, don't have a lot of choices today as they go out and look at homes. So record low inventory is a headline. The last headline, as we look statewide, is the fact that Colorado is growing. We all know that, but you should know that Colorado is now over 5.5 million people. When I was born in Denver in 1970, we had about 2 million people living in Colorado. Today we're approaching 6 million. That's why I-70 is so crowded when I go up skiing. That's why I-25 is so crowded when I drive between, say, Fort Collins and Denver. Our state is growing. So as our state grows, it really impacts our real estate. And you all should know that Colorado is really one of the anointed places on the planet to own real estate. Check this out. So this comes from research done by FHFA. That stands for the Federal Housing Finance Authority. They track markets all over the country. And if you were to look just state by state, you would see that Colorado stands out as one of the places having double-digit price appreciation. So on this map, the darker the blue, the better. The darker the blue means the higher that real estate prices have gone up. So you can see that Colorado is just one of a few places at double-digit or near double-digit price appreciation. So that's in the short term. Over the last year, this is specifically how it ranks. Colorado is in at 4th. Again, this is coming from FHFA. But check this out. Not only do we rank high in the last year, how about the last 25 years? Since 1991, Colorado has seen 296% home price appreciation. That is significant. That also is ranked number one of all 50 states in the whole country is where Colorado sits for 25-year home price appreciation. This is a great place to own real estate in the short term and certainly the long term. So at our forecast presentation that we had a few weeks ago, we had our chief economist in town. This is a picture of the one, the only Matthew Gardner. We flew him in from Seattle, and he gave a terrific presentation about the national economy, the national market. I want to give you just a couple highlights, a couple things that he showed to us. One is his prediction, our chief economist's prediction for GDP growth in the United States. Obviously, this will impact real estate. What he sees is over 2% quarter by quarter GDP growth in the United States. This is great news for our economy, great news also for real estate. Matthew Gardner has come up with this fun index he calls the Gardner Misery Index. So you hear about lots of different ways to track the economy. He's come up with his own. The Gardner Misery Index is a combination of unemployment plus inflation. It's kind of fun, and if you think about it, those really are the two things that would create misery if you had any misery. So going back in the beginning of 2012, for instance, it was near 12%. Today, it's about half of that, just over 6%. So I guess today we're less miserable than we were just a few years ago, but again, that's unemployment plus inflation. Matthew Gardner also gave us his forecast for employment. Looking at the western United States, you can see Colorado sitting there in a really strong position. He predicts 2.3% employment growth. That is very, very strong. That's higher than the long-term average. That's certainly higher than the national average. So what about U.S. housing? What does he think about the U.S. housing market? Before we get to Denver specifically, let's talk about the U.S. market in general. So one thing he predicts is that home sales will keep going up. So we've been recently hovering around 5.5 million home sales per year nationally. He expects that to keep ticking up and approach 6 million. But look at this, going back about 10 years, 11 years, we were over 7 million homes sold per year back in the heyday, back in the boom times. So even though we have a much greater population today nationally, home sales still today are less than they were. This is one reason why we don't believe we're in another bubble, because home sales are still not nearly where they were back then. I'm going to show you other reasons why we don't believe we're in a bubble here in just a second. How about prices? So nationally, home prices, what he predicts is as we go out into 2018, home prices will approach $250,000 on average nationally. Locally, that would sound like a pretty low number. That sounds like a nice price point. Our prices obviously locally are much higher than that, but nationally, that's significant. That's a significant milestone to hit, $250,000 as we look nationwide. How about inventory? So we know that inventory is a story locally. It's also a story nationally. Inventory nationwide is plummeting. Listings are evaporating. If we went and looked back 2008, so just a few years ago, we had nearly 4 million homes for sale. Nationally, today we have only about half of that. So the number of choices for buyers has gone in half in just these about 4 or 5 years, or I guess a little bit more than that. But still, that's a significant decrease in a short amount of time. Meanwhile, sales have gone up. So they bottomed out at about 3.5 million sales at the depths, at the lowest part of the downturn. And since then, they've been ticking back up. Again, we're now getting close to 5.5 million homes sold every year, but not nearly where they were back in the heyday of 2006. One prediction that Matthew Gardner is making for 2017 is the first-time buyer coming back. So what he believes in 2017 is that more than half of all buyers will be first-time buyers. So millennials have been delaying home purchases because of student loans, because of taking longer to get married and start families and really get off on their own and own their own home. And we see that in 2017. We see them coming back. We see them being a big part of the home buying population. So how about mortgage rates? This is a big, big deal. This has an impact to both buyers and sellers. What Matthew Gardner predicts is that by the end of 2017, rates will be 0.5% higher. They've already gone up about 0.7% since the election. He predicts that they'll go up another 0.5% by the end of the year. That will impact, again, both buyers and sellers. That's something to keep our eye on. We hear a lot, are we in another real estate bubble? So there are a few reasons why we don't believe that. I showed you one already. Here's another one, and another reason why we don't think we're in another bubble today, and that is looking at FICO scores. So looking at the credit worthiness of today's buyer. Today's buyer is really strong. So today's buyer averages a FICO score of 753. That is incredibly high. That is strong, strong credit. That's the average for buyers today using a conventional loan. If they're using FHA, it's a little bit lower. So that's one reason we don't think we're in a bubble. Here's another reason why we don't think that. If you were to look at long-term at the Case-Shiller Index, you've probably heard of the Case-Shiller Index. They track 20 markets all over the country. And if you look back all the way to 1990, and the red line would be a trend line. What have prices been trending over that long-term period? What you see is there was a boom, there was a bust, and then there was a recovery. Now we're back on the trend. So this red line shows you what would have happened if the boom and bust had never been there. So we're basically back on track. The same thing shows up when we look at FHFA. Again, another national index. They track nearly 300 markets all over the country. There's the boom, there's the bust, there's the recovery. We're just back on the long-term trend. So we're not seeing another bubble forming and going above this red line. That's one reason why we don't think that we're in another bubble today, is when we look at this information. Okay, so now let's look at the story of the Metro Denver market. We kind of look nationally. Now let's look a little more specifically. Let's look at the story of the Denver market. So we'll start with the vital signs. Here are the vital signs in the Denver market. We're just under $400,000 for the average price in all of Metro Denver. We finished 2016 at just under 56,000 sales. 56,000 homes were sold all over the metro area. And the average days on market in Metro Denver, 47 days. 47 days is well below average, and that is a very quick home sale. So that's on average how long it takes to sell a home in Metro Denver. Let's look at prices, but going back even further. So we talked about where we finished 2016. How about going all the way back to 1977? This data comes from FHFA. Again, it's the Federal Housing Finance Authority. As you look at this, you're seeing blue bars representing home prices year over year. So when the blue bar goes up, that's good. When the blue bar goes down, that's bad. So what you see is what? What you see is a whole lot of blue bars up, right? So a whole lot of years with positive home price appreciation growth. What you need to know is over the long term, this averages 5%. You can see here recently, the last 4 years in a row, we've been far exceeding that. So we are doubling or more than doubling the long-term average over the last few years. What we know is that cannot sustain itself. That pace cannot sustain. We do believe that price appreciation will slow down a bit. It cannot sustain at that level. It will back off a bit. We don't mean that prices will go down, but that they will back off a bit. Another thing to point out using this graph is that during 2008, 2009, 2010, really the worst economy of our lifetime, prices were only going down roughly 2% per year during that time. Compare that to a place like Phoenix, where prices were going down 22% year over year. So Denver fundamentally is a great place to own real estate. There are things in place here that protect our values, that insulate us from the severe swings that other markets experience. This, over the long term, is just a terrific place to own real estate. Now, there are a lot of numbers happening on this graph, but I want to explain this to you because this one is really important. This really tells the story of what's been happening in the Metro Denver market going back all the way to 2008. What you're looking at here is really simple. Up here, the yellow line, these are the number of homes for sale month by month, going all the way out to 2008. The blue line here at the bottom, those are the number of sales. So again, yellow, homes for sale, blue are sales. So this doesn't kind of look like a giant alligator, so I call this the alligator slide. So what you're seeing is that homes available for sale has just plummeted, right? Homes available for sale have gone from around 25,000 homes on the market in a given month in 2008 down to 5,000, 6,000, 7,000 homes available for sale, even as low as 4,000 homes available for sale in a given month. Meanwhile, demand has been ticking up. So we have higher demand, we have lower supply, so of course that means that prices have been going up significantly. One thing to know is that 57% of all the sales in Metro Denver occur below 400,000. So more than half, or approaching 2/3 of all sales below 400. Yet only 7% of new product that's built in Metro Denver is priced under 400,000. Builders today really have a big challenge on delivering product under 400,000. Why is that? Well, materials costs going up, land costs going up, all their fixed costs really being driven up, and it's hard for them to deliver product under 400,000. And so look at this. This comes from research done by Metro Study. If you're a builder or developer, strongly encourage you to reach out to them. They give terrific information, great data. And what we see is that over the last year in Metro Denver, we're on pace to start about 10,500 new homes. Now that's quite a bit, certainly more than we were starting back in the lowest part of the downturn when it was far less than 5,000 homes a year. But look at this, we're still only just about half of the new home starts that we had back in the boom times. So back in the go-go times, we were starting about 20,000 homes a year. Today, we're only starting about half that, 10,500. This is another reason why we don't believe we're in another bubble. Today, we're not starting nearly as many new homes as we were before. So where's the risk? We talked a lot about opportunity and prices are going up. Metro Denver fundamentally is a great place to own real estate. What about the risk? There must be risk somewhere. Well, there is. The risk exists right here. In this rule of thumb we call the 1%, 10% rule. All that means is when there's a 1% rise in interest rate, there's a 10% impact in the buyer's purchasing power. So when rates go up by 1%, the payment is impacted by 10%. Obviously, this impacts the buyer. You know what? It also impacts the seller. It impacts the seller in terms of what they can achieve for their home, the price that they can realize for their home. Let me give you a specific example. So this is a home that's been on the market in Metro Denver. This is not our company's listing. This is another listing that I found in the MLS. But let's look at this home. It was available for sale on September 23rd, and the price was $445,000 back at the end of September. That home is still on the market today at $399,000. So look at that. They have dropped the price $46,000. That price has come down $46,000 in that time frame, because you know what? A home at that price in this market should sell. It was overpriced to begin with. They had to lower the price. But if someone were to buy that home back in September based on where rates were, the payment would have been principal and interest $1,579 a month. Where is it today? Even though the price has gone down $46,000, where it is today, $1,560 a month. So the payment only went down $19. The payment only went down $19 a month, even though the price went down $46,000 a month. So that's a real life example of what happens when rates go up, what that does to a seller. So if you're a seller who's thinking about maybe putting their home on the market this year, given that we predict rates to rise, there is a risk to wait because you can see here directly how that impacts a seller when rates do go up. Okay, so here's what we're watching. What we're watching specifically is population growing. So we talked about how population is growing in Colorado. It's growing certainly in Metro Denver. Last year, there were 58,000 more people in Metro Denver. So what does that mean for real estate? Well, what that means is we need 23,200 new housing units. That's using a simple rule of thumb, 2.5 people per household. 2.5 people per household means we need that many new housing units to accommodate all these people coming to Metro Denver. So if we're sitting here a year from now, if we're looking back on 2017, what are our predictions? What do we see in our forecast? What do we believe to happen in 2017? Here are the headlines as we predict them for 2017. The first one will be that prices only rise by 8%. So that's still much higher than the long-term average, a little bit less than what they have been doing, but that's still really, really strong home price growth, again, all driven by high demand and low supply. Second thing we predict is that we'll only have 56,000 sales, so just a handful more sales than we had last year. Demand continues to tick up. We would have, by the way, we would have many more sales than that if there were more homes to sell, if inventory wasn't so low. The demand is there to have even more sales than that. We believe over the course of 2017, the record low inventory will persist. We really don't see any change to that. We don't see that there's anything on the horizon that will impact that, that will affect that. So this will still be a story in 2017. A few others, another headline that we'll see is that builders get creative. We are already seeing that. Builders are getting creative in terms of how they deliver product under $400,000. So you see homes being built without basements. You see the tiny home concept coming about. So builders are getting creative to deliver lower price product. Another headline will be that ARMs are coming back. So the adjustable rate mortgage will make a comeback as rates go up. As homeowners and home buyers look for ways to keep their payment down, they will consider things like 7-1 and 5-1 ARMs. And then the last headline is that the move-up buyer wins. What we'll tell you is that the last few years, let's look at 2017, 2016, 2015. We'll look back on these 3 years being the year of the move-up buyer. Because of all the appreciation that people have realized, all the equity that's been built in people's homes, they're able to use that equity, lock in a low interest rate, and own the home of their dream. There's never been really a time in our life that exists for the move-up buyer. So in today's market, the move-up buyer wins. So I want to thank you for watching this presentation. Again, I'm Eric Thompson with Windermere Real Estate. If you want any of the resources that I mentioned, if you want this PowerPoint, reach out at colorado@windermere.com. If you want, for instance, to receive our monthly newsletter, we put together a printed newsletter. We can mail it to you each and every month. It shows you what's happening in the Metro Denver market. It's a really nice way to stay updated on the market. Reach out at colorado@windermere.com. Thank you so much for watching. Have a great day.